Starlight U.S. began its strategy to invest in U.S. multifamily approximately 3 years ago. Over that time, 4 separate funds have been launched.
So Fund 5 is an aggregation of all of the previous Starlight funds, Funds 1 to 4, into a larger geographically diversified portfolio, which comprises approximately 6,800 multifamily units.
The new fund is a great opportunity for current investors to capitalize on an opportunity to consolidate Funds 1, 2, 3, and 4 into a larger, more diversified fund with greater distributions for each investor.
The amalgamation provides a much greater platform, a much bigger company, a much more liquid company. You are very much diversified all through the Sunbelt in the United States.
Today, within any individual fund, investors have exposure to maybe 4 to 6 markets. In Fund 5, they'll have exposure to all 10 of the markets that are in the preferred investment strategy for Starlight U.S.
We took the time to handpick those properties and put together an institutional quality portfolio.
Fund 5 is a case of the whole is greater than the sum of the parts. It gives our investors an opportunity to extend what has been a highly successful investment strategy.
The beauty about Fund 1, 2, 3, and 4 investors who are participating in Fund number 5 is that there is a tax deferral in that your units can be rolled over into Fund 5 units.
As a result of the aggregation of the 4 funds into Fund 5, our existing unit holders are realizing significant value appreciation.
The track records of Starlight Funds 1, 2, 3, and 4 have been fantastic returns for our investors, in excess of 34% IRR, and we look forward to producing similar returns for Fund number 5.
Between the significant hike in the monthly cash distribution, the strong geographical diversification across the portfolio, and the tax deferral opportunity that Fund 5 represents, we believe this is a great opportunity for our unit holders.
We can sell assets that have been maximized and redeploy that capital into other assets where there's still opportunity to increase income and value.
For new investors coming into Fund 5, it's a great opportunity. You're getting a more geographically diversified portfolio, new construction, Class A, institutional quality. It's already been compiled for you. All you need to do is invest.
Starlight U.S. purchases new properties.
The properties we select follow our asset management plan. They're carefully selected. We have opportunities to buy off-market and on-market based on our reputation. We've closed every single deal we've done thus far.
And so they give you a very quick decision. They don't, yes, that's an asset that we would like to own, or no, it's not, what have you got coming in the future? Again, that makes their, time for themselves obviously very efficient. I think it makes them a much better buyer and investment manager for their investors.
So these properties are state-of-the-art properties. They're Class A, recently constructed, and they offer an expanded universe of amenities, all best-in-class amenities, fitness centers, swimming pools, billiards rooms, Wi-Fi.
Starlight's asset management platform, especially in multifamily, has been tried, tested, and true.
We have 110 professionals across asset management, acquisitions, divestitures, financial reporting, and corporate finance.
Starlight has actively managed all of the assets that it's acquired, and as a result of that active asset management, the rents and income and ancillary income of the properties have increased dramatically.
And in partnership with our property managers, we have the scale and the leverage and the expertise to drive cost efficiencies, across what is a very sizable portfolio.
There's also an opportunity to further diversify the geographical base of the properties and also to participate in larger NOI growth as a result of our opportunity to sell some of the properties once the fund is formed and replace them on a tax-deferred basis with new properties, which demonstrate further upside growth potential.
We continue to see going forward with Fund 5 that there's ongoing opportunities for rental rate growth and income growth and potentially cap rate compression as well.
So the internal rate of return is a very strong 35% overall for the existing funds. That's well in excess of the 12% that we had targeted. So it's been exceptionally strong performance for the funds.
The U.S. economy continues to be performing very strongly. There continues to be a preference for renting versus home ownership.
The vacancy rate in the United States is at a historic low. It's about 95%. Properties in the U.S. are on average running at 95% occupancy. At that level of occupancy, it really allows for property owners to increase rents, which increases income and value.
We still have lots of room in the rents to grow, and NOI growth coupled with such a large diversified portfolio of newer vintage properties are hard to get, and we look forward to achieving great all-in returns for our Fund 5 investors.
I mean, one of the key reasons we've focused on the Sunbelt states in the southern U.S. is that there has been a trend for some time for big U.S. businesses to migrate operations and jobs from the Midwest and the northeastern states down to the Sunbelt markets.
So Starlight looks for cities with a population over 1 million people and that has great job growth and population growth.
Starlight U.S. multifamily is located in Raleigh and Charlotte in North Carolina, Nashville in Tennessee, Atlanta in Georgia, Tampa and Orlando in Florida, Phoenix, Arizona, Denver, Colorado, Las Vegas, Nevada, and 4 cities in Texas, Dallas, Houston, Austin, and San Antonio.
Starlight U.S. is on a growth trajectory.
We think Fund 5 is a great investment for people.
I believe in Starlight U.S.
The future of Starlight U.S. Fund 5 looks really great. We are extremely excited about the prospects of such a diverse and large portfolio of newer vintage properties, and we look forward to continued growth and maximizing the value for all of our unit holders.